Hello, everyone. I hope you all are doing really well and preparing well for your CMA examination. I've taken 5 MCQs. This is another MCQ video. So I'll be solving these 5 questions, or whether it's theory or I'll go through these 5 questions. Don't know what the 5 questions are going to be. Let's get started with it. Before I get started, let me just tell you few things which you guys need to follow. If you are new to this channel, make sure that you share, like, subscribe also. And what I want you guys understand is that while I'm solving these problems or these questions, what I want is you guys need to pause at every question and try answering it yourself. If you try answering it yourself, then you can improve yourself for the CMA examination. All right, I'll be doing more videos as such. I'll not promise that I'll means I've been promising since long time that I'll be doing regularly, but I've not been able to do it. But still, I'll try to make more videos of it. So I want your support. I want you guys to comment below and ask me about more doubts with the CMA MCQ, which topic I need to do, and I'll be doing with those topics. I'll be taking few questions and doing those topics. All right, so let's get started. We have the first question in here. The cost volume profit the, one second, let me just open this. Yeah, the cost volume profit relationship that are curve linear may be analyzed linearly by considering only first option is relevant variable cost, then is fixed and semi variable cost, and then a relevant range of volume and relevant fixed cost. I hope that you guys have paused this video and answered your question to it. Now let me answer to this. Well, a relevant variable cost is fine, but it does not make sense when we are talking about curve linear and linearly. So what I can understand, or what I can say with the CVP analysis or CVP relationship, this will be best when you do it in the relevant range itself. All right, it will be constant in the relevant range itself. What shall we do is nothing, but let's just consider this once and see whether this is the answer. Let's see. Yep, this is the right answer. CP analysis is assumed to be linear over relevant range of activity volume over the relevant range. Total fixed cost and total variable costs are assumed to be constant. I hope that you guys have answered this right and got it right. Let me just remove this now. Next, the following information relates to corporation. Okay, while reading this question, what you need to do is start from reading the requirement for the next accounting period. If production and sales expected to be 40,000 units, the company should anticipate a contribution margin per unit of, okay, contribution margin per unit of how much it should be. Well, let us just see in this question itself. We can see in here, in fact, what I would say is that when we are taking this into consideration, when we are taking this into consideration, this 40,000 units is one thing. Let us see if it is there in the consideration of the question. The following information relates to a corporation which produced and sold 50,000 units during a recent accounting period. The sales is 8,50,000, fixed is 2,10,000, variable 1,40,000, which is manufacturing cost, and then selling and administrative, you have fixed 3 lakh and variable 45,000. Now the point here is income tax not to be considered. We have to find out contribution margin per unit. Now to find out contribution margin per unit, what can be done is here is, first of all, let's just see what is sales per unit. I hope that you guys have a calculator. First, how much is sales per unit is 8,50,000 divided by 50,000. All right, I can do it here on the calculator. It is 17. Now what I need to do is nothing but I need to minus the variable cost, which is 1,40,000 and 45,000. So what I can do is nothing but add them both, which is nothing but 1,85,000 divided by 50,000. Let me just have a look at here, or let us just open a calculator here itself, which is nothing but 1 lakh 1,85,000. Well, I'll just do it here manually. Why is this keyboard coming in all the time? Come on, this is just an error. Let me just get another manual calculator. One second. Well, I've just got a manual calculator. What I wanted to do is nothing but take this into consideration. Let me just show that to you. I wanted this 1,40,000 and this 45,000, which is nothing but 1,85,000 divided by 50,000. How much is it? Now, how much is it going to be? 1,85,000 divided by 50,000. In your main examination, you will be able to use a normal calculator in your examination itself. That is equal to 3.7. Now 17 minus 3.7. Let us just see if there is an answer to it, which is nothing but 13.3. 13.3 is an answer here. Let us see whether it is the answer. Yes, it is the answer. And I hope that you guys have also got it right. Yes or no? Yes, I can hear you, though this is a recorded video. I want you guys to put it down in the comment section so that I can understand that how well you're doing it. Now, next one is, which of the following options describe the phases of business cycle in order of occurrence? Okay. Now, in order of occurrence, let me just understand. Like, suppose, let me just take that this is a graph. How will the business go ahead? Like, suppose if you can see like this, that suppose there is an introduction, then there will be growth, then there will be maturity, then there will be decline. And now how can that happen in this one? Like, suppose, let us just go with the options. You are at your peak, then you go towards recovery. After recovery you go to trough. Okay, that's not possible, because after recovery you improve. Then the next one, it says that is, you'll go through trough first and then go towards recession. No, that cannot happen. You'll have recession first and then you'll have recession first and then you'll go to trough. So option A is out, option B is out. Then comes recession, recovery, trough, peak. No, see what is here is that he's telling you'll be somewhere in the recession, then you'll recover. After recover you'll go down again, he's telling that is trough. So this option also does not come into the place. Then comes the third option. When these three options are there, and third option, fourth option should be there. Peak. You are at your peak. Then you go towards recession. Then you go towards trough. Then you go towards recovery. Yes, this is possible, and that's fine. This is highly possible in a business. Let us just see whether this is the answer. Let me just clear all these drawings. Yep, this is the answer, and I hope that you guys have got it right. Yes, I hope that you guys have got it right. Then next, in using cost volume profit analysis to calculate expected unit sales, which of the following should be added to fixed cost in the numerator? Now, if you guys remember what is the formula for this, what is the formula for a CP analysis? If you see that fixed cost divided by contribution margin per unit. Now, in the fixed cost, what can you add here? He's telling variable cost. Why will I add variable cost? I will not add. Predicted operating income. Yes, I added. While I calculate targeted income, I'll add operating or targeted profit. I will add this. So predicted operating income, I'll add it. Unit contribution margin, it will be in the denominator itself. It won't be in the numerator. Predicted operating loss, I'll not add it. So the answer should be this. Let's see in here. Predicted operating income. Yes, it goes with the target unit volume, target operating income plus. You can do that. Now let's move on further to the next question. Okay, here is another question. Let me just you know clear this drawings and have another, right. So now, which of the following would decrease unit contribution margin the most? Which of the following would decrease the unit contribution margin? Now, whenever you get a question of this type, What you need to do is nothing but take an example of a unit contribution margin. Like suppose, uh, what do we need to do? How do you get unit contribution margin? Is nothing but your sales minus variable cost. Then you will get your unit contribution margin. Now, how are you going to do that? Now, take an example. Sales is 100, and your variable cost is 50. Then you have your unit contribution margin as 50. Now, what you do is nothing but you apply all these four items which are there in here. Now, 15% decrease in fixed expenses. What, see, if I decrease fixed expenses, is it anywhere affecting me in this? Because this is sales, this is variable cost, and I found out my unit contribution margin. Now, decrease of 15% fixed expenses does not fit in here itself. Now, 15% decrease in selling price. Okay, let me just see if I decrease 15% from selling price. So this will become 85, and this becomes 50 only. Then what happens is my unit contribution margin becomes 35. So if I decrease 15% selling price, my unit contribution margin has decreased. Now let's see the next one. Don't just go directly with this answer, though this feels like this is the answer itself. 15% increase in variable expenses. Now let us see if this 15% increase in this variable expenses, if I have to increase 15%, how much will this 50 be? Now understand this, 15% of 50 is nothing but 7.5, so it is nothing but 57.5, and my sales is 100 only. So 100 minus 57.5, I'll get 42, 42 point, uh, 42.5. Now the point here is, if I am increasing if I'm increasing my variable expenses to 57.5, my variable cost is again decreasing, but the point, sorry, my contribution margin is also decreasing. Now see here, at 35 also this is a decrease, 42.5 is also a decrease. But the point here is, let us just go towards the fourth option and see what is the right thing here. A 15% decrease in the variable expenses. Now let me just do it at this side. Suppose 100 is my sales, then 50 I need to decrease it by 15%, so which is nothing but 7.5. So 42.5 is my variable cost. Sorry for that, 42 it is. Now how much will that be? Let me just check it in here. Now see here, when I decrease this 42.5, my variable cost has, sorry, unit contribution margin has increased. So this does not form part of the answer. So I have a choice here with this B option and C option. Now let us just go back to the question. Which of the following would decrease unit contribution margin the most? The most decrease, which one will do? Now which one is doing the most decrease is nothing but this one. This, it is making 35. Which option it is nothing but when I decrease my selling price by 15%, then my unit contribution margin is decreasing the most. Now let us just see this answer. Yes, you can see in here they have done almost the same calculation itself. You need to do the same calculation, or you need to apply your own calculation towards it and get the answer. All right, I hope that this video is highly helpful for you. Let's just go forward now. I hope that this video is highly helpful for you, and you have answered all your answers right. If that's yes, then put it down in the comment section, and do share this video with your CMA friends. And if suppose you want to join into my sessions, what you guys need to do is nothing but just WhatsApp me on the number given below, and I'll be happy to assist you on how you can join into my sessions. My sessions are the recorded sessions, and it has weekly live sessions. Because what you need to understand is that you need to have some concept clarity before you go towards these MCQs, and if you want those concept clarity, you need to join into my sessions. All right, let's just finish it off, and I look forward to you in the upcoming next session. Thank you very much.